It's my absolute pleasure to have Datuk Kamaruzaman Ahmad on the show today. He is the chairman of AWANIs Fund, Malaysia's first venture debt fund for startups and SMEs. Thank you so much, Datuk, for making time for this interview.
Thank you for having me.
Datuk, AWANIs Fund is under AWANIs Capital Partners, which is one of the 8 VCs selected under the government's Dana Penjana National Program through Penjana Capital, which is owned by the Ministry of Finance. A bit more about the fund later. I'd like to get more into that. But to kick things off, Datuk, many of us knew you when you were the CEO of QUAP, which is Malaysia's largest public services pension fund.
Yes, it's quite a while.
Yeah, it's been quite a while. No, what led you to the startup lending space?
Okay, I think basically my involvement in this startup lending space comes via this company, AWANIs Capital Partners. What we did was that, we managed to get a Korean partner called Hanwha Asset Management. And with that, I think when Penjana come up with the scheme to narrow or to reduce the gap within the Malaysian investment ecosystem by funding startup fundraising activities, that's where we came in to partner Penjana Capital. For Penjana, obviously, when they wanted to start this, they were looking at the various gaps that was in the Malaysian ecosystem, but they funded via 4 different categories of partnership. The first one is via the seed capital, which is seed funding. The other one is Series A and B. And the next category is to look at growth companies. And the last one is at venture debt, which we are one of the 2 venture debt companies that was identified by Penjana Capital.
When we talk about lending for startup, venture capital is predominantly the more popular option in Southeast Asia, at least. So why venture debt and not venture capital?
When you take a debt, actually, the fundamental difference is that the companies does not dilute their equity stakes, but the debt, we have to go through a normal credit assessment. Basically, venture debt is senior loans, and for that we have to make that credit assessment. The loans itself has a sort of a pre-agreed kind of arrangement or interest rate levels. Typically for us is between 8 to 15%. At the same time, there are other key considerations, key differences, among which is that we don't really get involved into a board participation, and that is where lesser interference in management. At the same time, there obviously is lower risk because debt is we look at the ability of the company to also service and repay the debt. And lastly, there's also a duration of the debt. Typically, it's between 1 to 3 years debt. But on the upside, obviously, we also always take a little bit of warrant, not very big, and that is where our upside is. So in terms of returns, also there's a slight difference. Obviously, equity, you get the right company, you get a lot of upside to it, but that is very, very limited. But we are still looking at the returns of between 15 to 20% returns for venture debt.
All right, Datuk, you mentioned earlier that this fund is co-managed with Hanwha Asset Management. This is actually the group's first venture debt partnership in Malaysia. Can you talk to us a bit more about the fund? How big is it, and where is your focus area?
Okay, we intended to raise up to 160 million for the fund, whereby AWANIs Capital Partners and Hanwha will be raising 80 million ringgit. and the other 80 million is via the one-to-one injection of Penjana. So that's the fund size that we are targeting. And with that fund size, we are looking at around 20 to 40 companies, typically because our size of our debt that we offer to startup companies are between 1 to 4 million US dollars.
Can you also talk to us about what are you seeing in terms of opportunities? I do understand that the funds has a broader focus of the region, Southeast Asia. But personally, from your perspective, in Malaysian context, maybe talk to us a bit more about what's looking attractive to you.
We feel there are many companies that is coming up in this new economy, and we felt that it's timely that we start this venture debt, giving them the options between choosing debt or choosing equity. But typically, obviously, if it's a good, strong growth company, normally they're going to have both the debt side as well as the equity side. They need to manage, you know. And for Malaysia, I think the ecosystem is great timing for us to introduce this, because we felt that there are a lot of young companies that is coming up to introduce a lot of new products, especially tech-based products that we feel has the potential to bring up to the unicorn status. For us, I think there are a couple of sectors that we are focusing on. The sectors are like consumer, F&B, even fintech, you know, and there are other things that we are also looking at, including healthcare as well as education, maybe even robotics, biotech, as well as even companies that is ESG compliant as well, looking at it in the ESG space.
You mentioned earlier that the fund is looking at 20 to 40 companies. At this point in time, how many have you invested in? How many companies?
Okay, what we have done, because this is a new company that was established sometime June last year, we have evaluated many companies, but we have given out only to one, but there are three in the pipeline, you know, which is at the documentation stage. But again, I said the team is evaluating many companies weekly, and there are a lot more in the pipeline soon.
Okay, I do understand that Iris Fund's first investment was actually in a Singapore-based company that produces alternative meat and seafood protein provider. Very interesting.
Yes.
Is the area that you're kind of focusing on, owning in? You mentioned ESG will be somewhat like a key, a focus for the fund. So are there specific areas that look particularly exciting for the fund?
Like I said, you know, we have given out to one, even though it's a Singapore-based, but of course they have their Malaysian operations here, and we have economic benefits for Malaysia in terms of employment as well as, you know, but the thing is that, you know, for us it is also looking at the various opportunities in this new economy. We are looking at, you know, some companies like in fintech. One of the companies that we are also in the documentations are in the fintech space, and the other ones are platforms for consumer or direct or via B2C as well.
I want to get your thoughts a bit more about the venture debt market, because it is quite new, especially in Malaysia. If you look at over in the US and Europe, venture debt is actually growing faster than the broader VC market. What is your observation here?
Okay, globally, I think, of course, the percentage has increased in terms of venture debt. In US in particular, it's about 20% already, and it's growing. For Malaysia, venture debt is very new. like I said, we are the first privately owned venture debt company, but we feel that there is a need for this alternative to startup companies, and that's why we set this up. I think the debt penetration for venture capital is low in terms of and that is where we felt that there is enough, there could be enough demand and penetration in this debt space. Because ultimately, you can see that there are many examples that I will point out to you that via the venture capital, via the equity route, ultimately the owner of the company will lose control of the company, and at the end of the day, they only have a very little percentage of equity stakes in the company by the time it goes listing. Obviously, a few examples, one good example recently, obviously, is Grab, whereby, ultimately the owner of the company has a very small equity stake at the end of the day. So we felt that via a debt structure, it is, the entrepreneur itself will be able to take control of the company and not lose its equity stake when it goes public in particular.
Yeah, well, certainly, when it comes to startups, of course, the most obvious advantage of using venture debt is less dilution. But talk to us then from a lender's perspective. Why is this form of lending more attractive to you, running a fund?
We feel that, via the venture debt route, the risk is a lot lower. And for us, of course, when we do the credit assessment, when we make those assessments, we do evaluate the company thoroughly in their ability to service as well as to repay the debt. So our risk is a lot lower. So when our risk is a lot lower, we feel that the business is also a lot more viable to offer debt to these companies. At the same time, like I said, the upside to it is at the end of the day, we do have a little bit of warrant as well. Normally, when we give that at the end of it, we do get a bit of warrant, and the warrant is our upside. So that is why doing this debt business, besides only charging 8 to 15% in terms of interest, the upside will be on a little bit of the warrant, which is the equity kicker, and that is where we can make the additional returns.
I think it's certainly great to have options for alternative kind of funding. And especially during the pandemic, I spoke with some startups, and how they find themselves in urgent need of funding, but very reluctant to lose that control that you have mentioned. I was just wondering, Datuk, when you meet founders of startup companies or young companies, what influences which companies get funding?
One of the main key considerations is about the product itself, whether the product can make it to become an acceptable universal product that's especially that is offered throughout the region as well. So I think in terms of the product itself, it is the key, the ability of the product to be accepted by particular. So that's the key consideration. But the other things obviously is about the management of the company, how we feel, that the management will be able to take the company further to listing status. Generally, this is typical in any investments. We feel that, it's the leadership, the entrepreneurship behind each company. And this is where the assessments are very critical. The assessments obviously is done not just via financial evaluation. The assessment is also done by face-to-face meetings with them. And we felt that, these young startup entrepreneurs we do have a feel of them, and we do have a feel of whether they can take their company their company forward. So I think, like I said, it is about the people behind it as well. It's very, very crucial for us.
Can I get your thoughts about the overall development of the startup space? Malaysia, of course, recently we've had a success in terms of in the form of Karsam, which is Malaysia's first unicorn, and that of course has now been getting lots of interest, especially from Singapore. We've seen quite a number of interests. Where do you think we should strengthen on in terms of our ecosystem to produce more successful companies?
Yeah, you hit the right note, actually. It's about the ecosystem. So you have to understand the investment chain ecosystem, right from the early stage of the company, the seed, the angel investors. Everything needs to be in place for the companies to be able to select and look at the funding requirements, at the same time prosper and achieve their developed status. So those are the keys. And what I think in this country, I think earlier there was some gaps in the ecosystem. The trouble is obviously about also the early stage whereby the banking system will not be able to support these companies. And this is where we come in, actually. So our window of opportunity is actually not very long. And that is why I think our loans, our debt that we offer are not very long, between 1 to 3 years. But once the company are able to generate enough revenue and enough cash flow, obviously they have a decent track record. We will not be the funding route anymore for them. They will go to the banks and they will get probably the cheaper funding. So we are filling up those gaps at the early stage where the banking system might not be able to offer because they do not have the kind of track record and cash flow to support their needs to expand the company.
Now, of course, you're coming from the private investor side. It's quite interesting because I remember when you were with Kuap, I think it was when you were the CEO, it was then Kuap made an investment in Uber. It was one of the first technology investments. So,
yes, correct.
Yeah, how has that involvement been? Do you see that Malaysia do need more support from institutional funds to really speed up the development of the startup?
Yes, that is definite. I think in this space, obviously, Kuap was one of the early entrants into the Malaysian ecosystem. Of course, we did not fund a Malaysian company. We participated in Uber, but that was part of our learning curve, and it was also quite a safe kind of investment. After that, I think we funded a few more, including 2 local startup companies that was based in Malaysia. And I think it has been proven to be quite successful with very low risk on the part of the organization. But the reality is that I think of late I can see that this awareness is there in the Malaysian institutional investors' view, and a lot more of them are participating in this venture to fund young startup companies and to make the most returns out of it. My only concerns, obviously, is that these companies, these young startup companies, you need to evaluate properly. You need to have that skill set, the talent pool of people to do these kinds of evaluation, to be able to find the jewels among the manys, and I think right now these things is all catching up, and I can see that it's not just among big institutional investors, but there are also some Malaysian corporates who are also doing it on a quiet and low profile scale, actually, at this point of time. But there's a lot more that's also coming up. I can see that.
Okay, that's just a couple more questions before I wrap this up. Can you tell us a bit more about the what's coming up for IRIS Capital Partners for 2022? Are there any areas that you are particularly excited about the coming year?
Well, I cannot really divulge the information, the companies that we are evaluating. But like I said earlier, we are looking at one fintech company. We are also looking at a consumer platform. And I think the team is evaluating, like I said, on a weekly basis, 5 to 10 companies. And according to them, there is enough pipeline for us going forward for this year in particular. We feel that, by next year, 2023, all our 160 million funds will be utilized to fund all these companies.
Do you have a, I guess, a ratio or in terms of the amount that you may want to allocate for Malaysia, or it's pretty much what's good out there?
Ideally, we want to have a 50% Malaysian home-based companies, but generally the one that is a bit more established are companies within the Southeast Asia region. What we do is that what we look at is obviously about not just Malaysian homegrown companies. We look at the economic benefits of companies operating in Malaysia, but they can be established or incorporated in other countries like Singapore, Indonesia. But in terms of the region, maybe besides Singapore and Indonesia, Vietnam is also looking very promising. And the main thing is that we are going to leverage on is actually our partner. Our partner, Hanwha Asset Management, is very established in this part of the region, including Vietnam in particular, and we will be leveraging on their connections and their in-depth knowledge about the country's perspective.
Right. One final question, Dato. I know that founders may want to get in touch with you. How do they reach you? And do you have a word of advice for them before they start pitching to you?
Generally, I think it's also about the team that we have, and we are also currently just doing our marketing and publicity drive. And with these kinds of interview, we hope more Malaysian-based startup companies will know our existence and will come to us. Besides, of course, we also do our part. It's two ways. They come to us, and we also go and see them as well. So it's a two-way thing, obviously.
And word of advice for founders who may be preparing their pitch to meet you?
Okay. My main thing, word of advice is that, obviously we want to bring up more Malaysian companies to the IPO stage, and we feel that, they have to have a bit of loyalty towards the industry here and the country here. So we hope that when you have reached that status, you will look at Malaysia as a destination of your listing your company, as well as Malaysia is where you will try to contribute towards the economy of the country. That's the main advice I have for them.
So nation building, that's the key message.
Yeah.
All right. Thank you so much, Dato, for spending some time to talk about the IRIS Fund, and all the best with your venture.
All right. Thank you for interviewing us.